is Tuesday, September 23rd. Welcome to Cardone Debates. We have some cool guests. Gary, good to see you.
What's up? What's up? What's up? Can you guys hear me?
Yes, we can. Loud and clear.
That is awesome. That is awesome. Dana, it's good to see you. Good to see you. I am so excited about this week. I got to tell you, it's September the 23rd. We are 3 weeks into September. That's what now? We're almost into month 10 of 2025. 10 months are getting ready to expire of our lives. I think this has been a freaking exciting year. I got to tell you, fucking drama filled, Bitcoin filled, political filled, assassinations, presidential overthrows. Man, I don't think it gets much more exciting. Probably the sale of Prozac and other nerve mutating or muting drugs are in great demand right now because this planet is on fire, man. I am so happy to be in Bitcoin because I think it safeguards me from this insanity. I'm really happy to meet these other two cats that are going to help us tonight.
Yeah, so I was at the conference this week in New York, the Unconference Treasuries, Bitcoin Treasury Conference, and met this cool guy.
That was Tim Coatsman.
Yep, Tim and Ed.
Did a good job. Did an awesome job.
Julian. Yeah, they threw it together in like 6 weeks. It was awesome. Brian was there. He is a big Bitcoin guy. So we met there. Brian, do you want to introduce yourself though for everybody else so they know who you are and where they can find you?
Brian, give us the CIA version, man.
I don't know about the CIA version, but I'll try to give you the short version. So I'm Brian, all in on Bitcoin, into Bitcoin treasuries. You can find me on X with my last name, Rothenberg Brian. But really excited about the space and, all the things that Gary was mentioning up front with everything outside of Bitcoin in the world. I don't need Prozac because I have Bitcoin. And it's crazy to say that Bitcoin changes your life like that, but it really does.
Cool, man.
Cool.
It's awesome.
Cool. So Jimmy is our next guest. Jimmy, you've come on before on Cardone Spaces on X. You're an investor, but tell us about you and where people can find you online.
Testing. So you can hear me okay right now? I switched over my microphone. So if you can
you
hear
sound
me okay,
good.
Perfect. So hey, I'm Jimmy Toussaint, and you can find me on Twitter, same way my name is spelled. And so for a living, I sort of develop hyperscale data centers. I originate powered land for hyperscale data center, to be specific. And I'm an investor in Bitcoin. Most of my net worth is in Bitcoin. I would say 95% or so of my net worth is in Bitcoin. Pretty good cost basis. I rarely look at the price because it doesn't matter for me anymore. I feel like I've already won, and I'm just waiting for me to hit my nine figure net worth now. So I'm just hanging out.
How long have you been in Bitcoin?
I aped into Bitcoin.
Can't hear you, bro.
Testing.
Am I the only one?
Testing. Can you hear me?
Yeah, it's kind of in and out a little bit. Can you speak closer to your computer, your mic?
Can you hear me better? Testing.
Oh yeah, that's way better.
So, aped in during the crash of 2020, COVID. Aped into DeFi ETH first because I was retarded, and I did very well for myself because it was a bull market. It was for those that was tracking DeFi. I was investing into those food tokens, the sushi swap, and all this nonsense. You were making a lot of money at that time, but it was all scams. I met a good guy named American Huddle, who we're very good friends now, and we invest in companies together. But I met him. He told me I was retarded, explained to me why, said I'm in this scam and I should actually put all my profits in Bitcoin, which I did, and started sort of learning about Bitcoin more and more over time. Luckily, I had a bunch of like OGs hold my hands. I mean, guys that have been in Bitcoin since 2010, 2011. And so, and now I'm here. still buying Bitcoin with whatever cash I make, and yeah, done well so far.
Cool. I think Gary's having some connection issues, so I'm sure he'll come back. But, we were trying to figure out, like, what exactly are we talking about today? What's the debate exactly about? Because, like you and I were talking about, Jimmy, before, and same with you, Brian, we all kind of agree that, like, Bitcoin is probably going to, hey, Dave.
Hey, Dana, how are you?
I'm going to stop rambling and bring you up now. What's up? Thanks for
It's
joining.
amazing that we found an angel to come help us on this debate. Dave, thanks so much.
Hi, Dave.
On us.
Hello. I mean, I literally just had a debate on Paper Bitcoin with Dark up on Wolf Space, what, 20 minutes ago. But I don't know what the topic is, so I'm going to be quiet until you pose a question or I hear what somebody else is saying.
We're
Okay,
not
but first, introduce
the same way y'all did it, but we would love you. Go ahead, Dan. You're doing the exact.
Yeah. First, introduce yourself though for everyone here. Who are you? Where can people find you? And tell us what you're about.
Cool. So I'm Dave Weisberger. I was the co-founder or a co-founder along with Ian Weisberger of CoinRoutes, which is probably the largest algorithmic platform for trading derivatives, one of the largest crypto platforms around, traded 200 billion plus already in 2025. Before that, though, I spent the better part of 35 plus years on Wall Street, mostly building algorithmic trading and program trading systems. Been around, started a decade basically at Morgan Stanley, at Solomon Brothers through Citigroup, and then about 6 years at a hedge fund called Two Sigma before I ended up going into crypto. But I've been in crypto since 2017. I'm a market structure nerd and a historian. I'm actually writing a book on automation of trading, etc., called $1 Million Frat Boys: How the Tech Geeks Change the Game. So, that's a lot of what I'm doing these days. And you can see I'm not exactly dressed for success today, but that's okay. I went to the gym and etc. This is spur of the moment, but hey, whatever. I'm here. And you can find me at Dave Weisberger 1, which is on the screen. That's my X handle, or David Weisberger on LinkedIn.
I've never seen a T-shirt make a business decision, Dave. So I don't think we invited your T-shirts or your clothes. We invited that brain of yours, instinct, that primal, gift that you were given that nobody else was given. We want to learn, bro. So Dana, I don't want to talk about Bitcoin paper, and I don't want to keep doing this whole debate over and over. We need to kind of refine what we're talking about. If we're talking about that I should, be a bad investor because I invest in a miner. Like when does this stop, guys? And I think I'd like the four of us to define what are we actually debating over? Because am I a bad human being because I own MicroStrategy and miners and some futures contracts and some call options and some Bitcoin and some Bitcoin call?
Can I
borrowed Bitcoin, and I'm still in the TradFi system because I can't get out. I would love to borrow more against the TradFi system. When do I become, my investment in Bitcoin is safe and I don't have to worry about the different flavors that may get rug pulled on? That's today what we're not PR. We're not doing ourselves a good job, Dave, on the PR front on these arguments.
Yeah, no, I agree. Caitlin and I had it. Caitlin Long, for those who you probably all know who she is. We've had this conversation multiple times. It really is a question of what's the social benefit, the economic benefit of leverage in the system, and where are the dangers and pitfalls, and where should it never be allowed versus where is it actually essential. I think that really matters. So what you were talking about, Gary, is you've been a savvy user of leverage your whole career. You know the downsides, etc. There are a lot of people. Look, there was $1.7 billion leverage wiped out 2 days ago. And those are people probably trying, because it was very little of it was in Bitcoin, by the way.
Yeah, the least of that was Bitcoin.
Right. It was on less than 300 million of it. So those are a lot of people who got wiped out that were trying to stack sats by being clever.
But Dave, when this is the only industry I've ever heard that goes through all this drama about people losing money. This is a blood sport.
Well,
man.
no, I agree. Well, it depends on why and how. I personally think, look, you're talking to someone who thinks that we should never have bailed out the banks in the global financial crisis, that there were ways of solving it without making Citigroup shareholders money. And I was a Citigroup shareholder. By the way, I benefited from that. And even so, I still thought it was absolutely ridiculous. Okay. But, you know, it's very complicated when you start talking about uses. There's lots of reasons. That leverage can make sense in terms of arbitrage, making markets efficient, helping people express what they want to have as their investment goals. And there's lots of reasons where it's just pure gambling. But I'm okay with gambling. If a gambler loses money in a casino, God bless. If the gambler goes into a casino thinking that that slot machine has 97% odds of giving him money back, and it's actually programmed to give him back 50%, I want the casino operator in jail. And to me, that's kind of the paradigm. The paradigm should be that markets should be fair. The risks that are there should be disclosed. And if you lose money, tough noogies. If you don't, on the other hand, have those risks disclosed, or if you cheat, that's a problem. That's my starting point. Now, I don't know that's an
so what we're trying to do though is we're trying to get a frame of what is our debate.
So I'm going to shut up then.
Yeah. We take a few minutes just to define it for the audience so that we're not arguing over something that's not an argument. I see a lot of people arguing over things they have never even, hey, what's our baseline? And that's why I said, hey, I own some miners. I mean, somebody's banging on me in the comment section. Gary, shut up on the debate, dude. You own Cypher and it's up $2 post-market. I appreciate the messaging, Ryan. Thank you very much. I mean, this has been a killer trade. Unbelievable killer trade, and it has looked like shit for a year compared to Bitcoin. And in fact, me not being in this space, me being in all these different pieces of the value chain is very good for me, man. And it makes me a much more effective warrior in this space. And I think if you're just going to stick your nose in Bitcoin, which is it may be superior, but it's so tiny, you know, it will get pushed around with the winds of politics and weather and economics. I mean, this is a super cycle, man. I think you want to stick your nose in all this stuff and truly understand it. That maybe that's the kind of discussion, instead of one thing being right or wrong. I mean, maybe Jimmy or Brian, but like we need to form out what it is we're going to argue about, and then we can pick sides. But what is it we're debating?
It's a good question, because you and Dave haven't said anything I disagree with yet, or anything that I'd want to debate you on, because I don't want to take the other side. You know, I think
the game we play here, though, we decide
Yeah.
what the debate is, and then we tell you what side you're on.
Fair enough, but hard to argue with that one. Nobody's saying that these things are better than Bitcoin. We're just saying that those things exist with Bitcoin, right? And that there's different opportunities at different times and different ways that you can potentially make money. And to Dave's point, lose it as well. And if you have the right information and you go in with your eyes open, that's important, but it's also building out the ecosystem, right? So, you know, I shared with Gary a little while ago that I saw Michael Saylor on a podcast, right? If he wasn't doing what he was doing with strategy, I probably wouldn't be in Bitcoin today, right? That's sort of my origin story. So, you know, everything can kind of contribute to that. I don't know that that gives us anything to answer your question about a debate topic, though, Gary.
Yeah, thank you for that. Jimmy, what do you think about it?
I mean, look, I heard there were a lot of things said that in past, previous conversations that I don't agree with, like, these conspiracy theorists, where a lot of these treasuries are buying paper Bitcoin, and I think there's a lot of paper Bitcoin being bought and traded, or I think exchanges are just, wash trading within their own wallets. I mean, there's plenty of things. There are people that are super bearish on Bitcoin treasuries and think that they're scams. And if you hold, shares in a Bitcoin treasury, that's paper Bitcoin itself. And so I think there's a laundry list of things that were said in the past that we can discuss. And I'd be interested in sort of understanding what your take is, Dave or Brian, on Bitcoin treasuries, or the presence of paper Bitcoin, which I think is nonsensical because, every time I ask someone, well, show me where that's happening. And it's always, trust me, bro, I've been in finance, bro. I'm experienced. I've been around for X amount of years. But there's never any proof. But yeah, I just wanted to hear your thoughts on that.
Well, other than that, it's obviously Scott you're talking about. That's yeah.
There's been many people.
I mean, look, my view on this is simple. There is historically in finance, there are plenty of examples where, the gold market being the most obvious, where the ability for banks to create massively large over-the-counter derivatives, generally swaps, sometimes swaptions or other sorts of things, and they created that in order to suppress the price because they had an infinite supply and they knew they would never be forced to deliver or verify that they could provide the gold. Right, that is a fact. There have been fines on this, so this is not like a question. Now, am I as the World Gold Council and as far as they will go in terms of gold suppression? Probably not, but there's a lot of that. The problem is with Bitcoin, you can't do that. Anyone who would take the other side of a swap contract without actually wanting to see on the blockchain where the Bitcoin is such a frigging moron. They deserve to lose their money, right? I mean, you proof of reserves is just not that hard. So to me, it's where you're jumping at shadows. Now, that said, if you tried to argue there was no manipulation in the crypto markets, you'd be out of your mind, right? Of course, there's manipulation in the crypto markets, probably more so than a lot of others because there's less regulation. Now, do regulators on balance provide more good than bad? That's a great topic. I don't know what the answer to that topic is because there's so many bad regulators out there. And
you absolutely know the answer.
I think the answer is no.
Exactly.
And so, but that would be my gut, which would get me in trouble because I'm literally friends with some senior regulators. So, what are you going to say? It is. So, of course, I'm not sure they would disagree with me.
Well, they're usually addressing problems that have already occurred, not that are getting ready to occur. And traders are some of the smartest people on the planet, whether you like to believe it or not. They're extremely brilliant people. They're philosophical. They are usually multidimensional in their thinking. And when they see a big old gap, they're going to jack it up and they're going to exploit it. And that is healthy. I don't know what we're so worried about. We're 4 years into the paper market. Like, I do believe a Bitcoin futures contract is paper Bitcoin. There is risk that if I think that I'm going to buy 100 Bitcoin in that contract in January, that somebody might not deliver, and then I'll have to sue for the delta. Versus me holding Bitcoin in custody. And I've had this discussion with some hardcore guys. And I'm like, hey, do you guys want me to have 12 Bitcoin in self-custody, or would you like me to own 1,200 Bitcoin across an entire complex? Because I can't get 1,200 fucking Bitcoin or 10,000 Bitcoin just in cold storage. One, I think it's extremely risk idiotic. Like, it's stupid risk to think I'm going to stick a ton of money into one bucket, right? And so, like, to me, we're not helping the industry come along. We're poo-pooing on these products. When what we should be doing is saying, wow, my sister's getting a 4% yield in her mutual fund, and she could get a 9 or 10% from Michael Saylor, who I'm comfortable with his audit. He's a public company, dude. He didn't guarantee to do a wallet discovery. And I wouldn't share my wallet I would never do that if I'm a public company until all other players have to do the same thing. You can't put the guy at a disadvantage. We're making rules up as we go and going, hey, we want to change everything. It's not fair. And maybe this isn't going to be a debate.
Does anybody up here disagree with that statement? Because it's sad in a debate, Gary, but I agree with literally everything you just said again. Which is, I mean, you and I can find things to disagree with, not that.
Oh yeah, and I agree with you both. But like, we also know that there are specific wallets that have been basically cataloged by, what was it, Arkham or something, that have most of Strategy's Bitcoin in them. We think, right? and their auditors are probably looking at the specific addresses. So even though they're not fully public, they're probably there. And that goes for all of these public companies. And it's probably easier for the smaller ones because they may have them in 1 or 2 wallets instead of 20 or 30 wallets or something like that. But, you know, there is, yes, the counterparty risk, but everybody conflates the custody with Coinbase, right? There's Coinbase, but there's a subsidiary that's doing the custody for institutions and others, right? And there's processes in place and other things there that protect those things. Again, we're not finding much to disagree on here. But in addition to that, you've got your auditors who are looking into these things, and you know, other people that are counterparties within this that give you more protection as a corporate entity, right? And this isn't that much different than, you know, a big company like, you know, if I go to Costco and they go to their bank and they say, hey, I need, you know, $20 billion, and their bank says I don't have it today. Like, is that the same risk that Strategy has with Coinbase? You know, maybe they can get borrow or something, but there's always this type of risk, I think, with a lot of businesses. It just might be at different scales that we're talking about.
I do disagree with something that was said, and I just want clarification just to make sure that I understand this correctly, Grant. So you would invest in ancillary businesses within the ecosystem as a way to, I guess, de-risk your position in Bitcoin? Would you say that? Like when you invest in miners and
Who are you
other
asking?
things? Grant.
I'm not Grant.
Oh, it says Grant. Oh, my bad.
Maybe ask Grant. He'll tell you that.
It says that right there on the bottom left of my screen. My bad, Gary.
Yeah. No, I thought you were posing it to someone else. Do I think I'm doing what? Do I think I'm?
So because you're invested in
de-risking?
miners, yeah, basically.
No, I don't think I'm de-risking. I think I'm adding risk.
I see.
I want risk. You guys are the ones that are bitching about the volatility. I love it. It's literally like more people need to study the TradFi market. You need, like, people that don't understand what's going on. Embracing what we don't know will help you become a much better Bitcoin. Like, there isn't a tool that I have seen introduced by Wall Street yet that I love everything strategies do. I will never ask Michael Saylor to go do a self-wallet audit as long as he's doing the audit that all other public companies are doing with the two of the top four. He's got 20% debt ratio. Let's roll, man. It's low. And some of these, so the miners has been a very, very bad investment for me. Okay, I bought one of these at $3. It's trading at 42. That all sounds good. I passed on $16,000 Bitcoin. Okay, for a year, I've been sitting on this IRN and Cypher and Metaplanet, but like, I'm okay with that because I allocated a chunk of the money that I was investing in the Bitcoin industry and went, hey, I'm gonna take a flyer, man. And this is either gonna do 20x or it's gonna go to zero. And if it goes to zero, it's okay because I have such a big Bitcoin position. You know, I kind of like playing the game. Plus, it lets me learn about the industry. Okay, like I will then ask study. Oh, how many hexahash are they doing? Oh, why is HPC good for them? That's bringing me to the AI space. So for me, it's the big issue is timing my exit out of these back into Bitcoin. When something goes up 500, 600, 700% in a year, like, you need to define the exit. David, you know what you and I should pull together 2 other guys and actually do a planning program for an hour or 2 of how you actually plan for an exit. No one ever talks about that stuff.
And taxes become a huge
Oh my God. Oh my God.
So it's like people ask me why, because why didn't I not sell some MicroStrategy that I owned from, a long time ago? And my answer is that, okay, I have to have a hurdle rate of 25% plus because of the long-term capital gains, and even on the shorter-term capital gains side, the number could be bigger. It's tough. The other thing is people have to understand what you're doing when you're diversifying a portfolio. I absolutely believe there's some value, but there's multiple plays. MicroStrategy, in my mind, is two things. It is a way of potentially acquiring more Bitcoin if Bitcoin is volatile on its path upward. And if the market interest rates go lower such that the yield bearing products become that much more attractive that he can make money and Bitcoin continues higher. Now, if Bitcoin stays at the same price for an extended period of time, MicroStrategy is going to be a dog by comparison. If Bitcoin has significant outperformance over a period, MicroStrategy will look really good in that period. And all the arm waving on MicroStrategy, and there's been a lot of it, Gary, you and I have heard it, all the arm waving is all about, oh, he said this, oh, he said that, oh, and all this, and oh, and now look, the price is getting crushed. It also happened to coincide with a period of the lowest volatility, or one of the lowest volatility periods in Bitcoin's history. And it's a company designed to monetize Bitcoin volatility. So if I'm Michael Saylor, I have, my incentive is the same as you and I, i.e. he owns whatever. He owns
one of the largest single holders of Bitcoin in the world.
What, 7 some odd %? You think he's trying to make his own shares go down? No, he's trying to do what he thinks is best in the long run. Now, do I have the same belief in the path Bitcoin's going to take that he does? Probably not. I mean, I have differences. I think that that there's a lot that could happen after Bitcoin gets to pari passu with gold. He thinks it goes way beyond that. He may be right. I'm certainly not selling. I don't know my exit planned at that point, but I want to wait.
Neither one of you will be arguing if that's the outcome.
What'd you say?
Neither one of you will be arguing if that's.
No, it's going to happen, and we will be arguing because it will depend upon the policy responses. Right now, Bitcoin going from here to 1 million or so is in the best interest of the people who control the levers of power in the United States. Full stop. Bitcoin going from 1 million to 10 million in all likelihood will be against their interest. And there will be some that will create a difference. Now, I could be wrong. It depends. If we have Bitcoin strategic reserve, there's all sorts of reasons to believe that I can.
In what way would it be against their interest? Could you specify?
Why? Because as Bitcoin gets at gold's value, Bitcoin really is still no threat to the dollar supremacy. At a certain point, it becomes a threat to dollar supremacy, and we gain a lot as an economy by having the dollar being the reserve currency. We've had some negative externalities, and for sure, hollowing out of our manufacturing base, aided and abetted by idiotic regulation, some other things that we could talk about. But there's always this fear that it could hurt the notion of fiat money in central banks and make the cost of borrowing higher for the U.S. In that scenario, then different things will happen. And I don't know what those things are, and I don't want to speculate because there's so much that could happen between now and then. But I'm saying it's possible we could have a total difference. And so when you make a plan, you have to have your plan for, okay, it's a multivariate plan, to use your words, Gary, because that's exactly what it is. Okay, Bitcoin goes from here to 1 million. Do I sell? Well, is the U.S. government making noises that they may want to do X, impound it, or they might want to put transactional difference, or they're going to start raising margins to try to crash it, or whatever. There's lots of things that could happen. Probably those things won't happen, and I'll say, screw it. Bitcoin at that point should go to higher because gold at that point might be $10,000 an ounce.
Dave, I actually think if they start jacking with it, it's just going to give you and I more opportunities to arbitrage the other system.
That's probably right. And
I think this thing is so out of the bag now that, I've said this 3 times this week. If I could find a couple of partners, I would seriously consider setting up an offshore shop and trade the fuck out of this. This is going to be the greatest vol trade in the next 4 years you've ever seen in your life.
Yeah, I think you may very well be right. I've thought similar things, but I'm enjoying writing a book and kind of hanging out. And having built trading companies and run them before, I don't know that I want the eat what you kill mentality right now. But I do. But I agree. The opportunity.
I'm not talking about forming a trade shop to build a business. I'm talking about putting together some spunk money and going, hey, we're gonna do 300x on this thing, but you have to do it offshore.
Well, yeah, for lots of reasons. Anyway, do we have a topic yet?
We're still discussing. We're over 2,000 people watching. Remember to share, like, and subscribe. We do debates every Tuesday at 5, and also come to
Why don't
Gary's.
we ask the
I am on
audience
Sundays.
wants to debate over and pick anything? Let's ask the audience, hey, what would you guys like us to debate over? And then Jimmy and Brian haven't had much airtime, so they should
You
be.
guys heard him. Okay, guys, what do you think? Gary,
Question fight.
I want to know what you're looking at. You said, well, it's not just about Bitcoin. I'm curious what you're looking at then. Has that changed? Like,
well,
I know you like to.
Well, I added to a strategy company today that I could buy under MNAP, because I think that it will be very difficult for these companies to stay under MNAP very long. This is a fascinating market, and I bought a chunk of it. And I mean, some of these companies, I hope my bank's not listening, but some of these companies, I'm surprised I'm getting this much leverage on it. They're just throwing it into the rest of the bag and going, sure, dude, $1 million worth of knockout. You can have some more if you want some. I mean, Dave, seriously, dude. I think they're starting to look at the crypto community, the whole space, and going, hey, it's all good. The S&P's up. Everybody's making it. You can tell it from the bankers. People are slaughtering this market right now.
Yeah, I mean, to me, it feels there's my Bitcoin thesis and my market thesis are different. I think that the doomerism on the market, while October could end up being a dangerous period of time, because it often is, the chart that I saw that has changed my mind, which I think this is what you're referring to, is if you look at that stock, corporate, stocks to GDP, it looks like we are at some ridiculous peak valuation that's going to cause a crash. And particularly if you compare it to wage growth, it looks even worse. But the problem is, well, not problem, but the reality is, if you add corporate profits to that chart, corporate profits are also at all-time highs as a percentage of GDP. Now, you could argue whether that's good or bad. I actually think there's some serious frickin' issues with prioritizing capital over labor by the way we've done everything in this country for years. But the truth is that corporations are doing ridiculously well, making a lot of money. Asset owners, traders, as you described, are making boatloads of money. And that money gets recirculated into these assets. And ultimately, I think a lot of it's going to find its way into Bitcoin, particularly as they start lowering rates and all that $7 trillion in money market funds say, you know what, 5% this was awesome, 3% it's a lot less awesome. Below that, it becomes, why the hell am I holding it? And so, yeah, it's your view and my view are similar, but I got there through a more circuitous route.
Well, because your IQ is so big, so it takes you longer to move to that mind. What do you think? What do you think, Jimmy?
Yeah, right now, some of the things that I'm looking at, I mean, I'm looking at SWC on the UK, Capital B on France. I'm
What's
heavily invested in those. Smarter Web Company, H100 in the Nordics. I'm invested in. I've been following Adam Back and David Bailey into these investments. If they touch it, I'm in. I think, do you know
what Bailey's MNAV is today? If their price is 125 at it sounds like you're invested in that. So.
I'm unsure. It's like 500. I know it's like the market cap's about 500 and something mil. They raised 700 and something mil. 200 mil was like preferred. I think it was like debt. So like they're either at one or like just below one, maybe. I'm not sure. I don't know if my math is correct on that. I know we got it $1.12 a share, and so if they're $1.20 something, they must be below NAV if you're including the debt. Yeah, it's good buy.
Yeah, I think we're all going to agree there.
It's aggressively oversold. A good friend of mine said that they were just offering ridiculous interest rates to borrow the shares and short the stock. It's just the short interest is incredible right now, so it's oversold. We expect a pop in a few.
If you talk to David, I would tell him he could do one thing that would guarantee a massive. That would. What'd you say?
I know exactly what you're going to say.
Do a 10-for-1 reverse split. Once you do the reverse split, then they can list options on it. They can't until then.
This sub $5 price. You keep bringing this up. It's a very important price.
People don't understand it. It's crazy.
Yeah.
It really is crazy. It's the single thing. If I knew he was going to do it, I would mortgage. I own the house.
For the audience, what Dave's saying
I'd
is
mortgage the whole house and buy it.
What Dave's saying is that a company that trades under $5, you can't short it. Okay, and there's a lot of players that cannot touch it. The covenants will not allow them to buy sub $5 stuff.
Yeah, because you can't margin it legally. It doesn't count as collateral. It's all sorts of things. Plus, brokers can't solicit. So no broker, even a broker who wants to recommend it to their clients, cannot in most cases. So there's all sorts of reasons, and it's one of the most obvious things. But by the way, if you doubt this, then look at the history of Citigroup. When Citigroup got killed in the financial crisis and they fell below $5, what did they do? They reverse split. Why did they reverse split? All the reasons I'm telling you, and it was part of the savings plan. The fact that that was part of their plan to save the stock price should tell you all you need to know.
Company did it last week. Sequans, Bitcoin Treasury company, did a reverse split last week even. So these things are starting to happen.
It's just, I mean, look, certain things make too much damn sense not to. And it's like, I know because the same person, basically I listened to and I bought into IREN and watched it languish for a while. And when you're saying that, I'm laughing and saying, okay, well, that's one of the better trades on my scale is less than yours. Probably lop a 0 off of your scale, Gary, and that's basically what I'm playing with. So I'm not claiming anything grand, but the truth is when you see 250% returns, that's pretty good. In a stock. Bitcoin, my returns are a bit higher. Okay, fine. But, I've also held it for longer and it's been a more core investment. I don't trade around my Bitcoin very often. I just acquire more when I get the opportunity to do so.
Well, look, while we're talking about this and you bring up Iron and Cypher and the returns, I mean, I do think I come back to this exit thing because look, some of these companies are actually changing their strategy because the way AI is changing. And when I invested in these companies, I wasn't really thinking that way. That was $40 ago, or no, $35 ago. Stock has gone up $35 since then, and that means that the market cap on this particular company, and I hate the braggers coming here. Hey, I bought below, and I'm so smart. I'm just trying to walk through. Hey, how do I make a decision? When I bought into this company, it was worth $1 billion, about $1.5 billion, $2 billion. Now it's worth 11. Now is Google going to come in here and go, hey, shit, 11 billion, I can pay 20, no problem. It's a check. Make it up tomorrow morning. Dave, I mean, some of these companies are all three of you guys, they're changing shape. The company goes to $11 billion, like, oh, I didn't invest in that. This is a different company now, right? And this is how a short-term trade, which was originally a short-term trade to get more Bitcoin, now I'm looking at it going, hey, could this thing outperform Bitcoin over the next couple of years? Could it give me a hedge? Today, it most certainly gave me a hedge against Bitcoin because it went up, right? Anybody got comment on that or input or?
I think the biggest question becomes, when do you get out, right? There's that question you were posing at the beginning of that, right? Is it going to run more, or has it already done the running that you expected it to do to potentially outperform Bitcoin in that period? And sort of thinking through those processes, and even, probably there are hedges to do that too. Do you sell some of it and keep some of it to let it run and things like that? Are, really good strategies for people to think about with all these things. And, Dave's saying that his bags are probably, a 0 less than yours. My bags are probably a 0 or 2 less than Dave's at this point. But, when I do look at these treasury companies in my investments, I do think about what is a good way to get out of them in time, right? For both the tax implications, but also, I'd probably rather have Bitcoin in the long run, knowing nothing else, right? Like, does the government in any country come after one of these companies, and then do they all suffer? Doesn't have to be in your country, right? Are there other challenges that come up? Does, Amazon and Google and Microsoft and Facebook all start buying all at once, in which case they might become, the big winners in some of this if they all did it all at once and competed with each other. There's a lot of factors that can come in that don't come in when you just look at cold storage Bitcoin, but you're not going to get any more yield than you're going to get with cold storage Bitcoin. So we're still kind of talking around that, I guess, initial question.
What do you mean you're not going to get any more yield? You're not going to get any yield from self-custody Bitcoin. You might get capital accretion, but you're not going to get yield from it.
Right. No, I just mean that you're not going to get more. You're just going to get Bitcoin returns, I guess. Poorly.
Yeah.
Oh, sorry. Go ahead, Jimmy.
Yes. Speaking on IRIN, I got into a couple of arguments. I have a good friend, KC, who is very invested in IRIN, and he's done very well for himself because of this. And he's doing his victory laps around me, and I told him that I was very bearish. And I think I think a lot of folks are just like trading the news. I'll put it in context. So I meet with a lot of these companies that are trying to build data centers around the country, and I know the constraints. I'm NDA'd with a lot of these companies, so I'm scared to even buy these stocks because I might be trading on inside information if I do. So I don't even touch these stocks. Right. And I've met with IRIN. I met with some of the executive team at IRIN, and they're out in Australia. And they've made a lot of announcements that have pushed their stock price up. And it's been a head scratcher for me, these announcements, because I know right now that Facebook, and this is public information, had to stop construction on $2 billion worth of sites and sell sites that are in construction, like legitimate, like some of the largest companies that are based in North America are getting rugged on some of the sites that they were building hyperscale data centers on, right? And so you got your Metas are going through problems, Google is going through problems, Amazon is going through problems. They're having to announce or cancel projects that they've already announced. And here's IRIN making huge announcements from Australia that they'll be expanding in sites that shouldn't even be available, because Google would have already reviewed these sites. Meta would have already reviewed these sites.
Well, why do you believe that?
Well, because there isn't a firm energy contract available for significant amounts of megawatts, like in America, for like that's all accounted for. These sites were locked down 2 years ago, right? Because you have teams that are based in America that are locking down all the energy available. Like the demand for energy is huge, right? And so the first people that get the best sites are the American companies. And so if they're going through trouble, it's hard for me to not look at announcements from a foreign company with a little bit of suspicion, if that makes sense. I don't know what year some of their sites that they're announcing are going to come online. There, a lot of things are being announced in the media, but I would be highly suspicious. So if your shares are performing well, congrats. But really watch them and really track what's going on with them, because there's a chance some of their sites might get rugged, because it's happening to companies that are larger than they are.
So Jimmy, if you spent time with the CEOs of miners, and I spent a lot of time with a lot of people, and it does not make me not be able to trade. Just that I can have lunch with anybody. They tell me whatever I want. I can go do whatever I want. I'm an individual human being. However, when you saying to me that of the CEOs you've met, you just look at this market and go, hey, look, iron is up 444% in the last year, and it's not sustainable, makes no sense, because these companies are winning very large contracts, and they're getting obligations from companies that a year and a half ago, everybody was like, oh, Google is going to become a miner. Well, that was the dumbest thing I've ever heard in my life. But they most certainly might invest in mining companies and data centers. This is not their core business, man. They'll never be good at it. Like there's a reason companies do what they do. You know, in the energy complex, you ask Dave or any commodity trader, largest commodity traders in the world do not work for energy companies. They work for trading shops, dude. Fucking animals. Okay, they know more about oil and gas and electricity than the very fossil producer themselves. So, see, I'm not sure these are overcooked. This is a $11 billion company. Intel just went up 30% yesterday in 5 hours. A 40-year-old company, Dave?
I mean,
and
that
it went up 10% the prior week.
But what you pointed out when that happened, it's funny how people always say, "Well, Bitcoin is because it's so volatile." Meanwhile, we've had Oracle within the space of 2 weeks. We've had Oracle up 40% in a morning, and Intel up 30% in 5 hours. I mean, there's multiple bits to that I find hysterical. But to get back to Jimmy's point, I mean, look, I am not an expert. I'm not going to claim to be an expert. I understand the one thing you said, which to me would be most concerning, and it has been represented to me that it is not true, which is that nobody could secure power. So it has been represented to me that in Iron's case that they managed to lock down, certain power contracts. And if that is true, that gives them a competitive edge. Now, if it is not true, then you're probably going to ultimately be right.
By the way, I can show all of these guys how to buy massive amounts of energy. This is just not true that you can't suck into the grid. You may not be able to do it in the center of Texas. That's not the place it should be anyway.
So timeline is everything. And that's the key here. So you can announce, look, I got 5 gigs. Until you actually can provide a realistic ramp, like, all right, I have a gig coming in the next 2 years, another gig coming a year after that, etc. Without that being set in stone, you don't really have it. The bottlenecks that people are facing are very significant. Go ahead.
But Jimmy, NVIDIA can't guarantee their forward earnings either. And the producer can't guarantee what they're going to produce in revenue in 2 years. They got to, hey, I think this is what we're going to do. Macy's guessing.
Well, we're talking about the guys that are actually building infrastructure, and NVIDIA isn't in that business of building hyperscale data centers, which is Iron is making the claim that they're going to build the actual hyperscale data center, the infrastructure itself, right? And so that's what the bottleneck is at the utility. And so the utility 100% wants to take your deposit and say, yeah, I'll give you as many gigs as you want. They'll take your money, but the timeline in which they'll deliver it, if it's too late, you're screwed. And once timelines become public and you realize that, okay, this site that was announced in 2025 won't come online until 2032, that share price is going down. So that's where the gap is. It's these announcements versus, hey, man, when are you actually going to be online? When are you actually going to be running? Because there are opportunities now to get in on companies that'll be up and running, like their data centers are up and running in 2026. Those share prices would perform well in the in the midterm. But I think in the short term, where everyone's trading on news and everyone's gambling on who's actually going to be coming online.
I guess we'll see. There's a limit to what I'll talk about because I don't know what's inside or what's not inside information that I'm privy to. So I'll just leave it at this: that public companies are often, there are lots of companies out there that do a lot of news management, and there's others that quietly execute, and then there are still others that execute and do good PR. And you have to ask yourself the question: the ones that the latter, NVIDIA being one of the best at it, the latter are the best performing stocks. The ones that execute well and do good PR. The ones that are flashes in the pan or that cause exactly what you're talking about are the ones that are winning the press release, and doing nothing. The same is true in crypto, although right to date, most of the projects out there have done nothing but the press release. They haven't executed dick. And so, I get myself into trouble. You want your ratings to go up. You want to get hate mail. and I still hold some XRP as a trade, but talk about companies and talk about a token that wins the press release war and has absolutely nothing to show for it. In fact, even when I ask them the question, why would anyone need XRP, the token, even if Ripple Labs is 100% successful and becomes the dominant software provider for payment software in the world? They can't answer the question because Ripple Labs won't, Brad, of course, owns a huge chunk and Chris Larson owns another huge chunk. And they, as a company, own a huge amount. So why would they ever talk shit about XRP? Of course they wouldn't, because it's part of their value. But the truth is they also can't answer the question, which is, in a world of stable coins, do you need to use the XRP token to back a stable coin rail? No, you don't need to. You can use the ledger, just like you could use Aptos, or you could use Tron, or you could use anything else. And I have no problem with any of those things. Even if XRP was 10 times cheaper than those guys, that means that its price can go no more than 10 times higher before it becomes prohibitively expensive to use. And so, the press release war, your point, Jimmy, is really well taken. There is lots of companies and assets and promoters that are really good at press releases, that do a great job. And, in crypto, God, we've seen so many of them. I mean, I see Brian nodding his head. I mean, everyone probably has their own pet things to talk about. And so I think your point is valid. From where I sit, I suspect that you're wrong on the Iron one, but only because I have personal relationships with certain people there and that I actually have a lot of respect for. But I could be wrong too, which is not a huge percentage of my portfolio. It's just done really well. Right. But it is important to understand that decode press release versus execution in everything, decode value. To me, that's the key. And Gary, you and I have talked about this a bazillion times. Invest in things that you see where the value is, or have your exit plan. And that exit plan is different for a trade where you're expecting a hype cycle and one where you think it's going to create enduring long-term value. And enduring long-term value, you can hold it. And, if you get the exit slightly wrong, not that big a deal. You'll wait for a little bit longer. It'll come back. But if you're going into a hype cycle, like if you're buying a meme coin because you think it's about to explode and it doesn't, get the hell out, because there is no floor, right? That's really kind of the point. Now, I have no idea what's going to happen with Fartcoin. I don't. But tell me that there's a floor on Fartcoin because it's a blue chip meme, and I will laugh to your face. Doesn't mean it can't double from here easily or triple or whatever, but there's no floor. So when you start talking about exit plans, it really depends on why you bought, what your thesis was in an asset. Sorry, I get too many nods. Not great for debates, but
that's good information, man. Good information. Who was talking? Was that Jimmy? Go ahead.
Oh yeah, I agree with everything that Dave said, and yeah, let's see. Time will tell. The bottlenecks are always at the utility when you're dealing with companies like Iron, and so these guys could very well have a PPA with the energy that they're requesting. Yeah, in the same way that me and my team had a PPA for 500 megawatts. And the utility came back and said, "Hey, bro, I just tried to order transformers, and it looks like delivery of said transformers are 2029. I'm sorry." After taking millions of dollars from
2029. Wow.
After taking millions upon millions of dollars for upgrades from us, and so that's a possibility. And so, like I said, and they could be telling you the truth. Like, I have a PPA, but the utility can always come back, and they have monopolies, so there's nothing you can do about it. It's a utility. So just making you guys aware of that as you're making these trades, or you're making investments in the sector.
Might go hire some guys with some really deep energy backgrounds and a big Rolodex. That's just about who's contacting who. So it's going to happen a lot, man. The big guys are going to get preferred treatment. These big miners are already learning. Oh, shit! I
can tell you something, some alpha about miners. So, and I'm seeing this come out of economic development councils. So, you have these like community groups that like make a decision on who gets allocated what, because energy is a public utility, right? It has to benefit the area. If you're going to ask for a significant amount of energy, it has to benefit the community that you're invested in. there's this new metric that's come out recently called jobs per megawatt. It's new because energy is scarce, and because it's so scarce that now you have to justify the amount of jobs that you're creating in the community that you're investing in if you're asking for a significant amount of energy. Bitcoin miners are they are super efficient. You don't need many people to run a Bitcoin mine. And so what you have is a lot of communities want to change like the tariffs, their energy tariffs, to rug Bitcoin miners that already have an energy contract. And they could do that by simply changing the price per kilowatt. They can do that. It's at their discretion, right? And so hyperscalers, they hire way more people. In fact, they would actually want to give power to a steel mill, because steel mill would hire way more people. And so I see this going on in the energy markets, and I'm like looking at what's, how things are trading, and I'm like curious to see how things are going to play out. Because I think personally, and this is my personal opinion, I think any Bitcoin miner that isn't going to include high performance compute like AI stuff in their business model are going to get rugged. I think if you're a pure Bitcoin miner, there are communities that are going to change the tariff from you. You're going to go from 3 cents to 9 cents to disincentivize energy being sold to this industry and to incentivize energy going to other industries that hire more people within their communities. And that's what I see happening in the background on my side.
Jimmy, do you have an energy background?
My partners do. I've actually learned as I went for the last 2 years. So my partners are in oil and gas, and my other partner Eric, these are like co-founders of the company. I'm like the third largest shareholder now of Garrison Data Partners. He helped rebuild the grid in Puerto Rico after the hurricane. He managed the $15 billion FEMA budget, and so my partners brought me up to over the last 2 years. I've been learning a lot. So yeah.
One detail I think maybe you guys know better, but Iron is doing both the Bitcoin mining and the high compute. And I think that they're pushing more towards the high compute with their data centers. So, a good point you made, Jimmy, but like in the context of Iron where we started, if they shift more towards that, because it's probably both more profitable, and then also if they're getting sort of rug pulled with changes, then they'll probably just do more of that. And a lot of the other miners, I think, at least the traditional Bitcoin miners, didn't have that sort of structure for their centers to have both businesses being able to go. So that's the little that I can contribute to this part of the conversation.
No, absolutely. And most Bitcoin miners operate with interruptible contracts because those are the cheapest contracts. And so you cannot do anything AI on those. They're just useless for AI because you need firm and you need redundancy.
So what do you think are some mistakes then that people are making at this point in the cycle, if this is super cycle or whatever it is? Like, all right, people are not selling in time.
Could I be spicy, Gary?
What do you guys think? Yeah. I mean,
I think
we welcome it.
I think too many people are believing Tom Lee past performance despite his now enormous profit incentive. I think his past performance was based on genuine belief, and he was right. And I think that he jumped into Ether and is way, way over his skis in his rationale and what he's saying, and is way too incentivized to say things as opposed to just say what he thinks. So I saw someone in the comments mention BMNR, and I'll mention a couple, and I'll give a couple of very specific reasons. Reason number one is that his contention stablecoins would be a big driver for ETH. Well, no, stablecoins won't use the most expensive platform. They will use the cheaper platforms. What it will do, however, is it will ultimately provide for tokenization to truly take off, because financial intermediaries will be able to offer very quick, seamless transitions. But the idea that Ether, which is what it is, has to compete with platforms like Solana and others, by the way, to get the lion's share of that, it's going to be problematic. And when you have the kind of heavyweights behind Solana as are behind Solana, which had the proof of concept. I mean, we may hate memes, and I do. I hate the notion of memes. Doesn't mean that, you can't make money on Beanie Babies or memes. You can, but Solana has literally proven it can handle the volumes of most financial markets. Ether has never proven a damn thing. And so I think that believing that, even though I think Ether will rally in the next rally up to $5,000-$6,000, thinking that it naturally will outperform Bitcoin and go past it, I think that it's going to be wrong. I don't think it will. I think Solana might in the short run, but it's interesting, right? And you really
you didn't say Solana would outpace Bitcoin.
In the next, if there is a major movement toward use of Solana for actual trading, and Bitcoin hits a wall at some power law threshold and only triples from here, I personally think Bitcoin could do more than that, but I don't know. Look, I'm invested in both, and I already said I'm not selling my Bitcoin below $1 million.
You weren't suggesting it was going to flip Bitcoin. I thought
flip. No, you can't.
Okay.
No.
Just
do I sound like one of those XRP lunatics who think that XRP is going to go to $10,000? Please.
Ethereum and Solana need to do something.
Well, but there are lots of people who think Ethereum is going to flip Bitcoin. I think
that's just outright stupid.
Yeah. Can I sort of piggyback on Dave here? I would say Tom Lee is brilliant. Tom Lee is brilliant because he knows there's a good portion of this market that is absolutely retarded and is going to buy into the narrative that is going to keep going up, and that things are going to be built on it. Like I, as somebody that started out, shitcoining before I went into Bitcoin, I experienced firsthand what happens on Ethereum, because that's why I was shitcoining in DeFi on Ethereum. When the price of Ethereum went up, it ate into all of my profits, and it became unusable at a point where you could no longer generate income because the gas fees were too high. That is how ETH works, and we've already seen during this past bear market, the profit incentive when the gas prices are low, which was on Solana, that whole meme coin hype, how much money that was made there is because you could transact on Solana without your revenue being sort of, or your income or returns being gobbled up by gas fees. And so look, if ETH goes up, it will rug anything that's built on ETH. That's how ETH operates. And so is there any long-term growth in ETH? Not really. People are going to gravitate to whatever's cheaper to transact on because most people are on these other blockchains to scam them. That's how I haven't found, outside of moving stable coins around, I haven't truly seen or discovered anything that was actually solved the problem or was useful outside of selling something to someone or playing hot potato with an asset that's going to end up going to zero anyway. I haven't seen, unless you guys could point it out to me, NFTs didn't change the world. Gary Vee was all over marketing that to us, and it's just going to change everything, guys. We're going to, RWA didn't do anything. People were talking about.
Can I jump on that one, Jimmy?
Go ahead.
Two things. The concept of non-fungible tokens is going to be a world-changing thing. You will find non-fungible tokens for things like share certificates and ownerships and deeds and all sorts of things where you can prove provenance. It has to be individual. These things are non-fungible, and it is a technology that's going to have enormous utility. That is not the same thing as saying an Ether rock JPEG on an NFT has value. Those are very different things, and you can argue both, I guess. I will not argue the other side of the value of the Ether rock JPEG. I would say, however, that you could argue that a CryptoPunk avatar is not any different than a Birkin bag, which is still $20 worth of leather that my wife would happily say is worth a hell of a lot more than that. So, I mean, who knows? But NFTs are an interesting technology for what it can be used for in terms of proof of provenance of ownership of a specific thing. When we talk about I hate the notion of RWA. I just prefer to look at it as tokenize everything. It is undeniable to me that if you tokenized assets, you would get better, more transparent trading and better financial markets with less economic rent for intermediaries. That latter statement means it's going to take a long time because intermediaries don't give up their rent, economic rent, very easily. Right? So it's going to happen. I mean, just what Larry Fink is saying, I've been saying it for 7 years. I also think it's going to take another 5 to 10 years, but it is going to be very, very real. Don't expect any real places where there's billions of dollars being made, like in securities lending or interest rate swaps or the repo markets, to move to tokens or tokenization on platforms anytime soon, but they will move, and they'll move for a bunch of reasons, most notably that it's more efficient. But you're right. So you can't, like, what drives me nuts about people is they look at the yield, at the TVL of a token and say, okay, look at how much it's worth. There's no token out there that has a TVL that justifies its valuation. Not a one. Not one. I mean, the multiples would just be insane. The TVL is merely a proof of concept. So the question is, the only token that's actually proven that it can handle massive trading volumes in huge, in at scale, is Solana right now. That doesn't mean that there aren't others. I mean, Sui has great, and Aptos have great tech underneath it, and they have lots of claims. But truthfully, that's the way I look at things. Now, maybe I'm a dinosaur. I mean, you see the gray in the beard. Okay, maybe. But truthfully, that's what it's about. There's value there. I just don't know when it will be realized.
Yeah, the thing is, at the end of the day, if all you need a blockchain for is, I don't know, a deed to your house. I don't like if you sold me your house and we're doing it through a blockchain. You've given me a token, and that token represents ownership of your house. If the government doesn't recognize it, then I don't own it. At the end of the day, a lot of what people say that we're going to tokenize requires external counterparties to even acknowledge it, which makes the use of a blockchain absolutely nonsensical. And let's say, all right, in the event that the government themselves starts operating on a blockchain, and now it's them using the blockchain. Why use ETH? I know a guy named Vlad, an Eastern European, that would give you a white label solution of a blockchain for $200 in USDT. Like, that's how it's going to happen, right? It's not going to be on ETH or Solana, and using that blockchain is free for the government. So I just don't see this. Like, all of this is about like an asymmetry of information. I know more. The government has no idea. Most of the people that Tom Lee is selling this nonsense to have no idea this is going on. But this is where eventually it's eventually going to go, because at the end of the day, compute isn't an innovation. You don't need ETH for compute. That it's a commodity, and it's going to be a race to zero here.
We almost have 4,000 people. Remember to like and subscribe and come to Cardone Debates every Tuesday at 5. And also send us a message if you have some good topics. We are getting some more comments around what some good topics will be. Yeah. Anyway, I still think the exit strategy is a good conversation. I mean, most people here, like, I also went through the shitcoin thing last cycle. Yeah, I lost a lot of money in that. Like, but it's very, very hard to not be looking at new shiny objects, especially like over the next year with all these other treasury companies coming up with something new, like some other problem to solve. Yeah, I am very curious what you guys are looking at.
Well, one thing that I was thinking about as we were talking, we brought up Tom Lee and BMNR, was what would have happened for a Bitcoin treasury company if Tom Lee was the founding partner of that and the spokesperson for that? Would that have catapulted it to a leaderboard much faster than some of these other companies have in the same time period that he did BMNR? There'd be more competition in the Bitcoin space, but for traditional finance and people on Wall Street, like, there's your trusted name. Completely different thing, but just something that I was kind of thinking about on the side there as we were talking about it before.
Gary, what do you think about that? I mean, I think that the Ether situation was a perfect storm, and that's why part of it is I you know, if I was wearing a hat, I would tip my cap to Tom for being brilliant. Not only that, but you know, Ether was basically struggling at below $2,000 and had been in the death spiral of all charts. And these ETF products were like dying and no one cared. And he comes in and raises the flag. It's like Neil Armstrong planting it on the moon. Boom. And Gary, you followed the stock. So you know, when I say boom, I mean really big boom. And then Ether itself, of course, you know, went from 1600 to like where did it peak? 4,800. Now it's not 4,200, but I mean a pretty huge run where we started to see the ETH guys starting to beat their chests and talking about flipping Bitcoin again. I haven't heard that in the last few months, not surprisingly, because pretty much every time they do, that's the top, which is fascinating. But you know, it definitely it shows something that Tom Lee knows very well, which is narratives dominate investment cycles, right? I mean, but you saw, I mean, Gary, you were chronicling it, you know, the BNMR story, you know, what it was, the stock was doing, and you were like incredulous. You kept asking people, how does this make sense? I remember you doing it. By the way, you're muted.
You know, I'm not an Ethereum holder. I think I have 6 Ethereum. The reason for that, I don't like Metallic. And it's not that I don't like them. I've never seen a 28-year-old become a billionaire running one of the most important companies in the world keep his shit together. So I'm pretty much sure he's gonna have so many problems, and I just don't need the human risk. So, however, when Tom did what he did, I think the one thing that I try to remember is that these markets are much, much, much bigger than we think. There's lots of moving pieces, and there's, you know, when I decided that I was going to either go broke in Bitcoin or become extremely rich, was when I took the time to analyze all the people that were coming into this industry in 2019. And it's all I needed to know, man. I just looked at the talent pool. He is a smart guy. He's been in this space a long time. He communicates the story well. I think he bought it right. Like Dave said, I think he was approached. And guess what? We're going to see a lot more of that. I guarantee you I'll be getting phone calls next year. We're going to run out of people to run any of these things and pitch a story and build a team. And this is all starting, man. I'm telling you, this is going to be a full-on multi-trillion-dollar industry. Okay, there was a time when there weren't refineries in Lake Charles, Louisiana. There was a little diesel place, and there was a little thing, and then 40 years later, dude, biggest LNG facilities in the world. So it took 40 years. It took Visa and MasterCard 52 years to get credit cards in everyone's pocket. 52 years. That's adoption. So I think all these tools are cool. I suspect Tom's going to figure out. He's on a bull now, dude. And if he fails, this is a career killer for him. He may walk away rich, but this is front stage, man. I don't think he will fail. Okay, I think there's a trade there, and there's an awful lot of TradFi guys that are going to be by the month. Like I predict that they're going to change the way corporations report earnings because they want to actually get away from the marks, because the marks should start getting violent. Dave, we should start having every 90 days some mark that blows out from standards, right? Because the world is literally, it's just this big water balloon, and people keep trying to push on it. And every time you push on it here, fucking bubble happens over in South Africa. And then South Africa pushes back, and Switzerland's like, dude, we're going to zero. And then Japan's like, what the fuck are we going to do?
Well, there's two things there. I'm going to leave the macro side out for a heartbeat, although we could talk about that if you want. But I do think that you make an incredibly important point about marks which is, I don't think a lot of people in the audience understand what Gary's referring to is Trump's point that quarterly earnings reports are unnecessarily burdensome for companies, lots of regulatory scrutiny. They generally tend to provide guidance on the right sequence anyway. It's all in the press conference. That's what matters, etc. And looking at the way private investors do it, most private investors want check-ins, they want financials, they don't want all of this dog and pony show. And whether you agree or disagree with that, and there's arguments on both sides. I don't want to get into it. The fact that it's moving in that direction seems pretty clear. And the thought process is that will decrease volatility, and that will cause more long-termerism in management. I don't know the answer. My guess is your point, Gary, is it may decrease short-term volatility, but will increase the likelihood of more big gaps when news and things actually change. I think that's
I agree, but I think it will allow for an massively inflated M&A cycle.
Well, that's the point.
They'll be able to fix all these little problems, right? I mean, they'll be able to go, hey, we have an $8 billion hole to get uphill. How do we do that?
Right. And in a quarterly cycle, you might not have the time to get it filled.
That's true. You don't. And the truth is, Dave, if I was running this country or if I was running Wall Street, I would get away from that immediately. You cannot build an army on quarterly earnings. Answering questions to 22-year-old snotty head kids that all went to the same fucking school, asking the same exact questions. And by the way, 1,000 analysts, all exactly the same people, missed NVIDIA, they missed United Healthcare, they miss everything. They ain't got one of these things right in the last 2 years. There's no analytics anymore.
One of my favorite TradFi analysts.
One other thing, and most of these management team, they spend their entire 90 days of work traveling on an airplane preparing for the next quarterly meeting. And you don't build an army like that.
It's true.
Not a great army.
One of the reasons that
it's a CYA army.
One of the reasons you and I both hold MicroStrategy is because Saylor has basically said, fuck this shit. He'll answer it. He'll use it the same way. He'll make his conversations, his press releases the same. And he doesn't care what the quarterly cycles say. He's looking to grow for the long term. That's his view. Now, whether he's right or wrong, time will tell. We'll look back in 5 years from now and decide were we right or were we wrong. I'm not going to market based on what happens in the next 2 weeks. It doesn't matter, right? You have to know that. So when you talk about exit strategies, it really that becomes really key. If you're buying something because you are aligned with the long-term vision of the management team, then your exit strategy is, as long as the management team doesn't change, your view of their strategy doesn't change, your economic situation of whether you need money doesn't change, you're not selling. It's that simple, really, unless the price gets to some absolutely insane level and you think that they can't live up to it. And that does happen, by the way, right? But it doesn't happen often. And you should have those ideas in your head when you build a thing. So to bring back to Dana's original question, I think that's really the answer. So like Nakamoto is a perfect example. I didn't buy a big position in Nakamoto, but I probably will end up with a bigger position over the next few weeks because what did you say, Jimmy? Whatever David and whatever David and his team touch tends to be good. Well, that's telling you that you believe that there's value in the management team. And if you could buy into a company at the same price that insiders were buying into that company, history says if the management team is good, you're going to do phenomenally well. Not a little well, not not a single, but you're smacking the ball out of the park. Or if you're playing cricket, you're hitting a six. Right. I know we got a lot of international people here and having spent 5 years in London, I know the difference. But the truth is that it really depends on that. So part of I always tell people that the most important thing for exit strategy is the thesis intact? Yes or no? And when the thesis changes, and theses change, they do. Like you can get a new administration, you can get new rules, you could get new people, you could have a falling out, etc. That matters. And so a lot of times, some of the world's best investors will say they don't invest in companies, they invest in management teams. And maybe that's true or maybe that's not true. And you can argue it. Personally, mean, Bitcoin has the best management team, which is crowdsource. It doesn't have one. Love that. But, you know,
Dave, let's go to Brian. Let's maybe wrap this conversation up. And Brian, like when you came on here, we thought we were going to debate strategy and paper, Bitcoin and instruments, and then Bitcoin cold storage. Where do you end here? Do you end, hey, cold storage is, because I think at the end of the day, the real debate that occurs on Spaces about cold storage is that cold storage, self-custody, total control will one day have a value over so-called all other Bitcoin. Now, I will say, I've been waiting for this event since I was 22 years old in energy, and it happened 3 times in 40 years for 14 hours total. These things do happen, man. They correct so fast. So I just hear people like, what the message to me, I don't want to happen. I don't want people not coming into Bitcoin because they think that Bitcoin cold storage has some superior premium super value every moment of the day, every day, when in fact it's only going to have super value on a special event day. And hopefully we never have that experience. But I want my family into every piece of these instruments, if at all possible, because I think they'll do well. They may not get the absolute penny out of it. But again, I don't see paper and physical products trading for different value very often. I mean, I don't think people can come up with many examples actually where the physical product is trading at a super discount or a super premium to the spot. Short periods of time, sure, but not long periods of time. I cannot remember a time.
Yeah, I'm still waiting for the moment when we can finally have like legit custodial solutions with like TradFi banks, because I'm at this point where I'm really annoyed at like trying to get access to like deals. I was like shopping around for a private banker, and you know, as I said earlier, most of my net worth is in Bitcoin. It's, you know, cold storage, and you know, it just doesn't count, and I have to like.
You're shopping around for a what?
A private banker, yeah, because a lot of my friends.
Banker, man.
Yeah, bro. I was looking for a private banker. My boys made so much money on the Circle deal. They all had allocations. I couldn't get in on anything. They said, "Bro, you need a private banker." Yeah. You know, you need a private banker. You can get in on these IPOs.
You need to join some country club. Some folks.
You know, but they don't count Bitcoin, and so that's why I even got in on like Nakamoto. I need to start showing that I have something. So they'll stop treating me like a brokey. Like I think that's how I get treated right now, and so like hopefully.
So you're saying right now that your cold storage is actually trading at a discount for you?
Essentially, I can't leverage it the way I'd like to get in on other opportunities. Now, look, I'm blessed for like just household income to be good enough. I don't need to like.
You don't have to rationalize it, man.
I don't need to liquidate Bitcoin. I don't need to live off of Bitcoin, but I'd like to leverage it for like opportunities, which, you know, a lot of us are restricted from doing now, and hopefully, you know, within this during this.
No, you're only restricted from doing it because you've chosen to have and keep super control over your Bitcoin. See, this is the piece I don't understand. Like I don't understand, if I'm not getting a premium, why am I so worried about this? When in reality, more Bitcoin have been lost in self-custody than anywhere else. Now, I have a 45 caliber weapon sitting within like, I don't know, 18 inches of me right here. It's fully loaded. Okay. If I go sit out there 30 feet from here, I got it, man. The self-custody of that 45 is so really important to me, but like, I'm probably not going to carry that fucking weapon around all day long around the house. Come on, it's unnecessary. You see, I'm not going to take $100 million on a fucking USB card and fly to South Africa because I'm traveling on a safari. And I'm worried about coming back to America one day and maybe the banks are closed. I mean, we got like I got to live my life, man. I got to assume that you guys making so much money to have private bankers that you're taking some of this money to not to your grave, but you're actually investing in the future, in our future, in our schools, and in politics, and like writing. Whether Dennis did a good job or not, dude, we need lobbyists. I'll still fund Dennis, but like, bro, shut up. Go talk to a Washington guy. Anyway, I got to tell you, I'm starting to believe that self-custody is actually trading at a discount to me because it's not giving me all the leverage I can use, as much Bitcoin as possible, while I see Michael Saylor and people that are bigger than him fucking loading their wagons up, dude. Why would I want to wait? Larry Ellison is going to buy $10 billion worth of Bitcoin. You're fucking crazy if you don't think that's going to happen. Who's the other guy? Ellison says I'm going to 40%. He's worth 18 bill. He's going to 40%. Salinas from Mexico. I'm 100, dude. Fuck 85. I'm 100%. This is crazy, man. We're going to wake up, Dave. We are going to wake up in 18 months and go, oh my God, 300 billionaires bought a shitload of Bitcoin. And not one of them knew it when they started the journey. My brother will end up buying 10,000 Bitcoin. He started with 100, man. I'm like, bro, you have no clue what you're doing here.
2 zeros.
Yeah, dude, 2 zeros. But the reason I know is because he's going to be able to do deals faster and bigger and better than everybody else that's not ready. And he'll suck that shit up as fast as he can. He's going to get paid to buy 10,000 Bitcoin.
I mean, the point that you were making, though, you in that excellent, I don't even want to call it a rant. We'll call it a monologue because I thought it was really.
And by the way, Grant can't do this without all these products.
Right. But the point that you made that more Bitcoin has been lost in self-custody than the other way is very relevant. The second place, I guess, is FTX, which, that was criminal theft. And,
wasn't a total loss, though.
No, I know. I got some money back, but, it's still, I expected to get money back. And so I reinvested so I didn't get crushed. But, whatever, it is what it is. But in any case, it is relevant. But there's a reason why I, in my very small, hack a couple zeros off my portfolio from you guys, have five different exchange accounts and 2 different self-custody wallets kept in 2 different physical locations, both of them separated from their seed phrases in different physical locations. Right. It's just the way it is. Right. It's just, I don't trust anybody. I like having wallets because if God forbid something horrendous happens and I need to, get the heck out of Dodge, the U.S. government goes fascist and I want to leave. And, maybe that's partly because of my race, but, it's like it's happened before. It could happen again. Today's Rosh Hashanah. So, we think about these things. So yeah, so I have some. But do I agree with you in general? I mean, of course I agree with you in general. I mean, if your iBit, or I actually like Bitwise, my BITB holdings go south because the government wants to take it, I probably have bigger fucking problems, right?
Totally.
And so I'm not worried.
Like the end of the world scenario, man.
That's right.
No bank's ever stole money from it. They have not. They tried to.
Yeah, I mean, I don't like paying money to people who don't earn it and don't provide value.
Right.
So, that's different. I mean, look, I spent too many years working for banks for me to want to give them money, but people like Matt Hogan and Bitwise, I'm happy to. It is just the way it is. People like Saylor, who is building a capital stock on top of Bitcoin, as you described, I'm happy to, because there's value there. And if he's right, he's right. And I'm willing to make that bet. Self-custody to me is important as an option. It's an escape hatch. It's a valve. And when you lose freedom, often what you're really losing is the optionality to use it. Most people never need most of the freedoms that we talk about. You don't worry about them. They don't really happen. Even free speech. I mean, yeah, in the pandemic, a lot of people got nailed, and I really worry about free speech more than most things. And
We all should.
please do not, for lots of reasons. And I'm not talking about private companies doing things. I'm talking about the government making, like today, despite everyone thinking free speech equivocates to that butthead Jimmy Kimmel from the Man Show. No, my free speech is the fact that Yahoo had to admit today that the Biden administration pushed them to silence people on COVID and a bunch of other issues, right? That came out today. So those things worry me. But do we get to the point where I think that we're looking at confiscation of Bitcoin? I mean, yeah, there is a President AOC, or could potentially move in that direction at some point. Bitcoin could go to $1 million under a President AOC. They may decide, hey, we want to do that. I'm just being honest. At that point, then there's a premium.
Such a bullshit story. They say that though. Nobody ever said they did not recover much gold. Only from the idiots. Man.
Trust me, I owned plenty of pre-33 gold in my life. So I know. But that's because what will happen is before that happens, smart people will take their Bitcoin off of exchanges and put it into wallets and make sure that people can't find it. And it won't be in one wallet so that they can hire Chainalysis to come knocking at your door. It'll be in 20 wallets or whatever. It's just, that's what's going to happen, right? But that doesn't mean that the optionality to be able to do self-custody, to be able to do peer-to-peer isn't extraordinarily important.
Awesome.
Right?
Awesome. It's a benefit that others don't have. However, it's coming. Okay, because like my bank called me up a month ago and said, man, we're so tired of hearing your tweets on Spaces about how stupid we are.
Really?
Every time I do, oh, bro, I'm just Mr. Authentic with everyone, I'm with the bank. Hey, I like my bank, man, but they only work 4 hours a day, and I'm trying to do another wire for $100,000, and this took me 37 minutes. I'm driving down the road doing 120 miles an hour. Lady calls me up with passport. I say, yes. Okay. Well, I'm doing this every 10 days. And every time I do it, I do a Twitter announcement. They call me up and they said, hey, we do happen to have a facility that allows one of our good customers like you the ability to do a wire anytime you want, 24/7 for 100 G's. The technology's already there, dude. They could let all of us do this shit tomorrow. And literally, it takes me now, it's almost fast. It is actually faster than me moving Bitcoin. Crazy. And that tool was never there. When the tool got there, Jimmy, I think, you know what I would do, Jimmy? I walked into one of my banks one day with a ledger on all my wallets because they were kind of like fucking with me on margin calls. And they have never asked me a question or margin after they saw all those wallets. They are so nice to me now. It's unbelievable. And they can't touch it. I mean, literally, they could not touch those coins. But them just seeing it, I think people should actually, maybe if you do have a bank, it's not going to hurt you to do that. The bank president, hey, man, by the way, got a lot of shit going on over here. I can move this shit to any other bank anytime. And I just love the arbitrage. And I think for me, the debate on this thing is the Bitcoiners, and I love Jeff Booth. I like everybody in this space. I like Max Kaiser. Max Kaiser's probably going to say, hey, Gary's still a bit of a degenerate fiat addict. You know what? I probably am. I've been doing this 67 years. And I really like slamming the fuck out of bad people. And Bitcoin and fiat, if I disconnect completely from fiat, I can't fuck with anybody. I like fucking with people. It's so much fun to be able to borrow money at 7%. 6 and 7% on a phone call. Hey, I'll take another $500,000 and smash it into Bitcoin. Leaves their bank and it goes into Coinbase or it goes into Binance, and I buy another $500,000 of Bitcoin and just got to hang out for 7-8 months. I mean, super trick, man. So I like having all of it, but I think people need to understand what these instruments are, what they mean, how you can get hurt on them. So anybody else got, Dana, you got closing comments or any kind of direction you'd like us to push this, which was not a debate, but it was a good conversation, I think. And Brian, Jimmy, thank you guys for showing up.
Yes, sir. I have some closing comments actually. Uh, I've been going on YouTube, and in the last couple of months, I've been seeing a couple of things that are upsetting to me, and it's been a bunch of creators saying that you should get to 0.01 Bitcoin or zero point 0.1 Bitcoin and you can retire. And I want to sort of address a lot of these ideas of getting to 0.01 Bitcoin or zero point 0.1 Bitcoin.
Yeah.
Do not listen to those grifters. Get to 1 Bitcoin. You see, if I told you right now I have $1 million house and I'm selling it to you for 112,000, I don't care. Even if you don't have the money, you'd find the money because you know that I was selling $1 million house. You go to your cousins, you go to your mother, you go to your father, you go to anyone, you start selling plasma, you do anything you can to find the money to buy to buy that house because you know it's worth $1 million. So these people that are telling you to get the 0.01 Bitcoin, they're grifters. They're total grifters. You should do everything. Look, get to 1 Bitcoin. Get to 1 Bitcoin. Do everything you can. It is completely non-binary behavior to think that you can get to 0.01 Bitcoin and that's enough. No. Get to 1 Bitcoin, 111,000. You can do it. Work side jobs, do Uber Eats, deliver, sell plasma as I suggested. Do everything you can to get to 1 Bitcoin, please. That's it.
I like it. I like it a lot. Brian?
Thanks, Jimmy. Yeah, Brian.
Lots of great things said by everyone on this call. I think, with what Gary was saying there, cold storage Bitcoin doing something else, I think it also comes back to value, right? And I think that was also Jimmy's comment. Like, sure, get to 0.1 Bitcoin, and then what are you going to do? You're going to stop working? You're going to stop adding value, right? There's value to be derived from the financial system and some of this arbitrage that we're talking about with whether treasury companies, whether it's, investing in miners, all of those things. But in the end, too, you get to people who are running Bitcoin venture funds and Bitcoin equity funds, and they're investing in the future of Bitcoin as well. Everybody's trying to add value in some way. So don't be a value taker, be a value creator. And, probably attesting to Jimmy, Dave, Gary, and I'll speak for myself here. If you start adding value for others, value will come back to you probably tenfold as you're doing that too. So those are my closing thoughts. Agreed with pretty much everything everyone said today. So we didn't get too much into the debates, but great time being here with you all.
Brian, thank you so much, buddy. And I don't think Bitcoiners will ever have too little time to argue about too few small little things. We can find reasons to argue over anything. Dave, my man, thanks for coming in and helping at the last minute. Got any closing comments?
I mean, not really. I've talked plenty. I think that what Jimmy said is so important. If you think, and I do, that Bitcoin is trading at a 90% discount to its value, then act accordingly. You're not going to get many chances like that. I've had in my entire lifetime, I have had one investment that when I bought it, I thought was at a 90% discount. And I literally put everything I could into it, and it allowed me to buy my first house. Sadly, most people would say that the reason I knew it was a 90% discount was because I had inside information from the Italian parliament, because I had friends in Italy that told me some things and I knew what it would be. Today, we would say that was illegal, but it was in 1992. So I don't think anyone's going to find it anymore. But, truthfully, it's the only other time in my life. And I did exactly what Jimmy said. I did everything I could to beg, borrow, and steal to be able to get to that level. I was a junior programmer at the time. Or actually, I was a junior associate, a junior VP. I just made vice president of Morgan Stanley, and I really wasn't paid very much. But, right now is a generational opportunity. It will probably last a little while. But if, let's say, Bitcoin goes to 200,000, it's still at a 80% discount. So the people who constantly say as they're DCAing into Bitcoin, I'm too late, are the same people who said they were too late at 50,000, at 30,000, at 16,000, yada 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 yada. I mean, I made the mistake. I was going to put a significant chunk into Bitcoin between 700 and 1,000, and I froze. And I ignored it, and I ignored a couple friends of mine who tried to push me into it in 2014. I ignored people again in 2015. And then I got into Bitcoin in 2017. And the very first thing I said was, My past mistakes don't matter. I'm a trader. I don't care about past mistakes. You're only as good. You mark everything to market. So many people in Bitcoin don't mark to in the world don't mark to market. They say, well, I could have added 1,000, so fuck it, I'm not going to jump in. And that to me is that if I'm going to give one piece of advice to traders is ignore the past, ignore what you could have done, and say, what do you think is going to be going forward? That's my closing comment.
Yeah, it's like playing a hand of cards. That was a hand ago. I got a new hand now. You really just have to look at it that way. And if you start getting gunshot, you need to know, oh, wow, I'm gunshot. I've got hit beat so many times. And then go talk to somebody because that is the worst time to trade. Worst time. I wanted to ask Dave
Thanks,
a question.
Dave.
Danny, just one second. So, Dave, the night I'll probably always remember you as the guy that said, hey, it's at a 90% discount because you keep saying it over and over. And I like consistency. I happen to believe that's probably true over some period of time. But on the trade that you did that you thought was a game changer, the inside trading deal, which I personally don't think that's insider trading. I think that's having dinner at a nice little event. You go hurt something. I mean, shit. Did that trade under or over? My guess is you made a shitload of money on the trade, but you might have should have stayed in it longer.
Nope. I knew
Really?
exactly what I needed to do.
Yeah,
it was a specific company that had contracts out that people thought they couldn't get.
At least 7 or 8 years, right?
And I knew they were two things had to happen for them to be profitable. They had to win the contract, and a law in Italy had to change.
Yeah.
I knew for a fact the law in Italy was going to change because the way Italian politics works. I mean, my friends, well, whatever, they knew. And then they dug in and said, oh, yeah. And we know our friend from this particular company. So I knew it was going to happen. So, yeah, it was.
It reminds me of a story.
But I knew it was a 10-bagger. I got in, I got out, boom, 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 done.
It reminds me of a story. I walked into the UK energy regulator office after working with them for 2 or 3 years and with my boss, who was a fucking baller, dude. And we spent 45 minutes. These guys did not think I would do well in England with my accent and my approach. And for some reason, this Dr. Eileen Marshall, 18 different MBAs, just took a liking to me. I think she was so sick and tired of hearing people that talk fancy. And I would draw her pictures. He and I walked out of that meeting 45 minutes later. It's right next to Interpol. And he looked at me and he said, I think that's illegal. And if it's not, it should be. My God, dude, how do you get all this intel? I mean, literally, the entire plate just rolled out. He was like, my God. I mean, I guarantee you, he got on that plane going, dude, let's pour as much money into that deal as possible. If you get close enough to some of these deals, and I was not doing anything wrong, man. I was part of the committee. I was part of the whole committee helping change, but it was so clear to me. And I literally walking out, I'm like, hey, don't fuck with us. Don't change your mind because you will crush me. Because, I had to put a trade on too. I had to get things kind of going. You know what I'm talking about. Dana, you want to end this up?
Yeah, guys, thanks for coming for Cardone Debates today. We're definitely having you all back. We learned some really good nuggets of info and wisdom. And if anyone is interested in coming, please send me a message and also give us some topics. I tagged some really good topics for next time. So I read all of these comments. Really remember, to give us some good topics. And anyway, we'll see you guys next Tuesday. And join Gary's Sunday at 10:30. Bye.
Thanks, guys. Thanks, Gary. Thanks, Dana.
Thanks, guys. Thank you.